And everyone, welcome. Welcome, guys. We'll get started shortly. Welcome. Welcome, everyone. Hey, Mary. Welcome, Mary. We'll get started shortly here. Guys, we'll get started shortly. Hey, Michael. Welcome, Michael. Welcome. Hey, Juan. Welcome, Juan. Guys, this is our beginners class, so beginning traders. All right, we'll get started shortly. All right. So our beginners class. So whether you've been trading just a few weeks, a few months, this class is for you. We'll get started shortly. We'll go over some basics, fundamentals this evening. All right. So welcome, Mary, Michael, Juan. We'll get started shortly, guys. So our beginners class. If you're here for the first time, welcome, welcome, guys. We'll get started shortly.
Hello.
We'll get started shortly. Hey, Gerald, welcome, Gerald, welcome.
Hey, David.
Hello, welcome. All right, guys. Let's go ahead and get started. All right. So this is our beginners class. All right. I call this our safe space, right? So we shouldn't have any of our experienced traders here, all right, on this class. This is for new traders, right? So whether you guys have been trading for, you haven't had any experience trading, all right? Whether you've had a few weeks, few years and still trying to figure things out, this is your class, all right? I'm gonna go through some things that, concepts that you guys must know, right? If you want to trade, if you want to have a career in trading, all right? These are things you you have to know as a trader, okay? So this is your class. So if you guys, please, if you have any questions, just stop me, right? Just stop me. You can raise your hand, right? Either on Zoom or just say, hey, Dave, I have a question, and we'll stop. This is important information, okay? Because as you guys, as you start building your I call it your building blocks in trading, right? We want to make sure that you guys have the right information, all right? So that we don't have to fix things later down the road, okay? So we're going to start out with, I'm going to share my screen. 1 second here. I'm going to share my screen. If you guys do not see my shared screen, please let me know. So you should see it now. All right. So you should see this book. It's called Trading in the Zone. All right. When we do our one-on-one coaching, all right, and I recommend if you want to be get serious about coaching, all right, about trading, do some coaching. All right. All right. Do some coaching. We do coaching. All right. And this is one of the books that we give to our coaching students. It's free to our coaching students. It's called Trading in the Zone by Mark Douglas. All right. This is perhaps the #1 book, I believe, right? Especially for new traders, getting into trading, understanding how trading works. All right, is Trading in the Zone by Mark Douglas. So a lot of the work that we do comes from this book. Master the markets with confidence, discipline, and a winning attitude. Okay, so again, very good book, right? A lot of times we get into trading and we don't, we have no idea that your mindset is critical, right? How we apply our mindset to trading is important. There is a free audio book too on YouTube. All right. So if you guys go on YouTube, type in Trading in the Zone, right? And I recommend that traders do this, right? You can listen to the free audio book on YouTube. All right. And so on your downtime, you're driving, right? You're at home, pop it in, right? Listen to it, Trading in the Zone. All right. Master the markets with confidence, winning, discipline, and a winning attitude. All right. All right. Any questions on this book? Any questions here? Any questions? All right. So this is a must read. There are other books. Hey, Robert, welcome. There are other books that we recommend, but that's down the road. But this is a must, right? Trading in the Zone by Mark Douglas. All right. All right. So let's get to it. I want to ask you guys, when you, as new traders coming in, what are some of the main concerns that you have? All right, anyone, when you're looking to trade as new traders, all right, once you get some experience, you get more advanced, there are other concerns, but as new traders coming in, what are some of the concerns that that you guys might have, or that you guys have?
One concern I have is, how do I know which stocks are good?
Okay, Mary. Okay, very good. So which stocks in particular are the best to buy? Okay. Oh, good. All right. All right. Anyone else? Hey, Frankie, welcome. Anyone else? Hey, Mike. Welcome, Mike. Anyone else? So Mary said, which stocks are good or the best to buy? Anyone else? So what are some concerns as new traders, right? What are some concerns that you guys have? I know you have some concerns. Otherwise, you wouldn't be here. What are some other concerns or questions you guys have about trading?
Hello, Mr. Stephenson.
Yes,
I know,
hey, Michael.
for me personally, I know I can agree with Miss Mary, figuring out or identifying which stocks to buy that are going to give you the best opportunity. And then also entries and exits.
Oh, good one. So your entries and exits. Okay, very good. That's usually the biggest one, right? The main one. And we'll spend some time on this evening. Okay, our entries and exits, right? When do we enter? When and where do we enter? And when and where do we exit? That's a big one, right? That's a big one. And again, what do we buy, right? So which stocks, which options, currencies, futures, okay? Which ones do we buy? Okay, very good. Very good. You guys are thinking. Anyone else? Anything else? Anything else? Okay. All right. As we go through this, if you guys, again, just stop me. All right. This is your training class. All right. So this is your training class. All right. So feel free, all right, to ask any questions. Stop me as we go through this. Okay. So again, trading in the zone, right? Trading in the zone. All right. If you do not have this book, like I said, we give it to our one-on-one coaching students. Okay. But you can also go on YouTube and get the free audio book. All right. The free audio book. All right. Let's get to it. All right. Let's get right into it. I'm going to give you guys some tools here that it's a must-have. All right, a must-have and things we just have to do when it comes to trading. All right, so I'm going to share my screen. All right, so you guys should see my screen here. If not, please let me know. All right, it should say support and resistance, the keys to your success. Support and resistance, the keys to your success. So, Michael, you mentioned entries and exits. All right, entries,
So,
where do we enter? All right, and where do we exit our trades?
mhm.
This is perhaps where most traders get stuck. Right? So understand that we don't just randomly enter trades. Right? That's the first thing. All right. So when we trade, we want to think like a professional trader, and we want to execute a trade like a professional trader. All right. And we want to do things in a systematic way. All right. Systematic way, almost robotic in nature. All right. But first, we need to understand how the markets work and how price work. All right. All right. Has anyone heard of support and resistance? Anyone heard of support and resistance?
Yes, sir.
Okay, very good. All right. So all your trading, everything we do, all right, starts with support and resistance. Okay. So I want you guys to take a picture of this, whether it's a screenshot, use your phone, take a picture of this. Support and resistance, the keys to your success. All right, so support and resistance, the keys to your success. Take a picture of it. I recommend that that as traders, you guys laminate it. All right, laminate it, print it, and then laminate it. It's that important. All right. So support and resistance, the keys to your success. All right. Now, this is something you must know. So we can't get past this. All right. This is something we must know. So what I would like you guys to do, all right, when you get a chance, go on Google and pull up everything you can on support and resistance. All right. When I first started trading, when I figured this thing out here, I had charts. I've got a big manual with support and resistance charts. Okay, it's that important. Everything starts here. All right, so let's go through it. Everything starts here. If you guys, if you know about support and resistance, I want you to kind of just have an open mind, because we do things a bit differently, and we use this a bit differently here. All right. All right. Okay, so let's go through it. Support and resistance, the keys to your success. So how do we get resistance? This line right here is our resistance line, and this line here is our support line. So think of resistance as your ceiling, right? So the ceiling we're at home right now, right? Or wherever we are, right? Your ceiling, right? That's resistance. So we can't move past our ceiling, right? Our ceiling keeps us down. Support, think of support as your floor, right? So right now you've got your foot on the floor. That's your support. So support is holding price. We call this price or price action, right? These lines here, just think of these lines as, you know, the price going up and down, or candles, right? Going up and down. So support is holding the price up, right? Resistance is keeping the price down, all right? So resistance and support. Understand that there are buyers and sellers that are sitting right here at resistance, and same with support. There are buyers and sellers, okay, that are right here at support. All right. So the buyers, guys, the buyers are looking to push the price higher, right? Support, sellers or shorts is what we call them. They're looking to push the price lower. So there's a battle between buyers and sellers at support and at resistance. But we first need to understand how we get resistance. Does anyone know how resistance is formed? How do we get resistance, and how do we get support? Does anyone know that? Or take a guess.
Liquidity.
Liquidity, okay, yes, liquidity. And what else? Let's keep it simple, all right? We're gonna keep it simple.
Other people buying and selling against you.
What's that, Michael?
Other people buying and selling against you.
Yes, other people buying, right? So buyers and sellers, right? There's a battle between buyers and sellers. But how does, more specifically, how do we get a resistance line? How do we get a resistance line, and how do we get a support line? How is it formed? Because again, all our trading will come from here. So we need to understand what's happening here.
Price action.
Price action. Okay, very good. Okay, so let's do this. Okay, write this down or take it to memory, right? Resistance is formed when the price makes a high. So resistance is formed when the price makes a high, a minimum of twice. So if the price makes a high here, that's not resistance. That's just a high, right? We need the price to make another high right at that same area, right? So let's say that area right here is $100, right? This resistance line is $100. We need the price to get back to $100 and then retrace or pull back to get resistance. Minimum of twice. All right. The more times the price gets to that resistance level, that $100 mark, the stronger the resistance is. So look here, first, touch one time, second, third, fourth, we've got resistance, right? Same thing here. If the price makes a low, we do not have support yet, right? It needs to get to that support line. Let's say support here is $50. All right, $50. All right. So we need a minimum of 2 touches to get support. The more touches we get here, right here, the stronger the support. All right. And think of this as a wall. Think of resistance as a wall where price is having a very difficult time breaking through. All right. The buyers are having a very difficult time pushing the price higher. All right. And the sellers are having a pretty easier time pushing the price lower. Same thing for support. All right. The sellers or shorts are having a difficult time pushing the price lower, and the buyers are having a much easier time pushing the price higher. All right. So support and resistance, we need, again, minimum 2 touches. Okay, at that level for resistance and here. All right.
I'm so sorry, Mr. Stephenson.
Hello, is it just me or you can't hear David?
Can you guys hear me okay?
Yeah.
Yes, now we can.
Okay, very good. Okay, all right, so let's move along. All right. So understand that there is a battle between buyers and sellers. And write this down, everyone. First, you should have taken a picture of this, okay? All right. So we want to buy on a break of resistance. Write this down. When we enter, all right, we want to buy on a break of resistance when the price breaks resistance like here. All right. And we want to sell, exit, or go short. We won't talk about shorting right now, but exit on a break of support. So Michael, you had mentioned, how do we enter and exit, right?
Yes,
We want to buy. Always buy on a break of resistance. Again, write this down.
yes, sir.
Buy on a break of resistance, and we want to sell, exit on a break of support. When the price breaks resistance, we know that the buyers are in control. So we want to be buying.
Yes, sir.
Okay.
It's funny because I was doing the exact opposite. I was buying at support.
Yep. And that's why we're going through this, because that's what most new traders will do. And that's not your fault. It's just what's taught out there. All right. So yeah, you're right. Most traders, you want to buy. We are taught to buy here at support, right? Buy here at support. And why are we taught to buy here at support? We are taught to buy here at support because we are looking to buy here and have the price go here.
Yes,
But
sir.
understand, this whole area here is not tradable.
Yes, sir.
Okay, this is not tradable. We do not trade. This is okay. Understand, and I'm glad you mentioned that, Michael. Okay, understand that from here between support and resistance, that's consolidation, accumulation, or we call it distribution. All right. This area in here is indecision. There's indecision in price. So buyers, there's a battle between buyers and sellers in here, right? We do not get a clear signal, okay, until the price breaks resistance. Once the price breaks resistance, we know, guess what? We have more buyers and sellers. The buyers are now in control, right?
Makes sense.
Same thing here. When the price breaks support, we know now the sellers are in control. They're no longer in this area here battling out price, right?
Yes, sir.
Okay.
That
So we
makes
always
sense.
want to buy on a break of resistance, sell on a break of support. We want to buy on a break of resistance because the buyers are buying. And who are the buyers? The buyers are big hedge funds, big institutions, right? Big banks. So all we're doing is we're piggybacking on their trades, right? Piggybacking on their move. We'll know when they decide to move, when the price breaks resistance to go long, we call it long, all right? Or when the price breaks support to go short. And we'll go through some examples, but this is critical. We do not trade in this area in here. We do not buy in this area. We do not go short here, all right? What we do is we wait for the price to break resistance to buy. If it breaks support, then we will exit the trade and we're out. Okay, so this is your framework. We have to do this. We have to understand how support and resistance work. All right, and we have to execute like this every single time. All right.
So I have a question. So
okay, Mary.
What's the assumption on what's going to happen to the price after you have bought? Because this is really, it's counter to our normal way of thinking, because our normal way of thinking would have been, like I think Mike said, you first buy at when it's low and hope it goes up, and then you make a profit. So what's the logic?
Very good. You guys are thinking, right? You guys are thinking. Okay. Yes. So when we trade, we have to go against what we think, because we think we do as individuals. We think, hey, we want a low price, right? This is why would we buy here at a high price when we can get it here at a low price, right? And because we want a deal, right? We want a better price. So why would we buy here, right? When we can buy here. Same for here, right? We want to buy here. Understand that when we're dealing with support and resistance, okay, yes, we're looking for an entry, but we're not trying to find a low price, okay? You never get a low price. And you'll never exit at a high price. And this will make sense. It's not clear right now, but as we go through this will make a sense. Okay, so when we set up our trades, we do want a low price, but not here. Not here. All right, not here. Not at support and resistance. We do want a better price, but not here. Our goal at support and resistance is to only buy when the buyers are buying. So when we look to enter our trades at support and resistance, enter and exit, right? We are looking to enter only when the buyers are buying. And we're looking to exit, sell, only when the sellers are selling. All right. So when would we want to buy? When would we want to buy? Anyone?
When the stock is breaking out, excuse me, when price is breaking out over resistance.
And why?
Because like you said, that's usually when someone big is moving the price, and that's usually going to start to attract other traders and other people, which is going to, I guess, bring in more volume, raise the price.
Okay, but who's in control?
Definitely the market makers or someone's in control. It's not me or us.
Okay, so who's in control?
Buyers.
The buyers. Simple, the buyers. All right, the buyers. So when the price breaks resistance, we know the buyers are in control. If the price breaks support, right? Why would the price break support?
The sellers are in control.
The sellers are in control. The sellers are in control. So Mary, you're right? Good job, Mike. You're right. We do want a better price. We want a lower price, but not here. Not here. If we imagine, right? Imagine we look to buy here at a low price, okay, in sellers territory. Just understand when we trade in their support, this red line here, that's sellers territory, right? So if we enter here and selling comes in, guess what? The price could go much lower. All right. And we're not buying where buyers are buying. We are buying where sellers are looking to go short. Okay. I know it's, no, it
makes so much sense.
Yeah.
It really does, because like I said, 80% of my trades get stopped out, and I just can't understand why. I mean, logic, like you said, buy low, sell high. Or you would think the opposite is true. Sell high when you think price is extended, right? Try to short, but you figure out sometimes, like I said, your entry is off, or maybe you didn't look for the 2 minimum rule. And so price hits a level, and then you think price is going to go back up and come down, and no, it shoots up.
Yeah. So when we, yeah, Michael, when we follow this, when we buy, I mean, think about it, right? Think about it. And I use this analogy sometimes, right? If you guys, if you're walking in a mall, right? And you walk past a store and it's empty, right? Most of us will not go in, right? It's empty. There's a reason why. Or you go to a restaurant, right? And there's no one there, right? Guess what? There's no buzz, right? There's a reason why no one is there. All right. Now, guess what? You go to that same restaurant and it's packed, right? There's got to be a reason, right? The food, right? It's got to be good. Same thing here, right? We need to wait. All right. When the buyers are buying, guess what? There's a reason. Now we don't need to know why they're buying. We don't need to know why, right? There might be some fundamental data or whatever, right? We don't need to know. All we need to know is that they're buying, and we're gonna buy along with them, right? If the price comes down, breaks support, guess what? We sell, we exit. We don't need to know why they're exiting. We just need to exit, get out. All right. All right. So remember that support and resistance, the keys to your success. Please take a picture of this, because we're going to move forward and we're going to get into this even more. So please take a picture of this, print it, laminate it so that you have it for your records all the time. Support and resistance, the keys to your success. This is your foundation. When we do our training classes daily, everything that we do, right, starts right here. So it's something that we need to know, we need to understand. And the sooner we get this, right, the less frustration we'll have in trading. And guess what? We might just have a chance to make some money. All right. So the keys to support and resistance, the keys to your success. Okay. All right. So we're going to move on from here. All right. You guys should have this copy of this. So we're going to move on. The next thing that you guys must have is this. And I'll share it here. All right. So take a picture of this. All right. Laminated, printed, laminated. All right. If you guys are serious about trading, this stuff we need to know. All right. No exceptions. We have to know this. All right. So the 4 market phases. So we know support and resistance. All right. Now we have the 4 market phases that every trader must know. The 4 market phases that every trader must know. All right. So go ahead, take a picture of this, screenshot, print it. When you get a chance, laminate it. All right. The 4 market phases that every trader must know. All right. Okay. So it's going to start with accumulation. I know this is your roadmap. So the goal is this, right? So Mary, you will never have to ask which stocks should I buy. And Michael, you should never have to ask after this evening, right? Where do I enter and where do I exit? That's the goal. So if someone comes to you guys and say up the street, say, hey, Facebook is a great deal, right? You should be able to go here after tonight, right? You will have this. And after tonight, you guys will know, right? You'll know what to do. And that's the goal. You'll know what to do. All right. All right. So let's go through it. The 4 market phases that every trader must know. All right. The first phase is the accumulation phase. That's 1. The second phase, and I'll go through each one. The second phase is the markup phase. All right. The third phase is the distribution phase. And the 4th phase is the markdown phase. So first phase, accumulation, markup, distribution, markdown. Within the markup phase, we've got reaccumulation. And then within the markdown phase, we've got redistribution. On every chart that you guys look at, whether it's a 1-minute chart, an hourly chart, a daily chart, a monthly chart, price action will follow these 4 phases. That's it. There isn't a 5th phase, a 6th phase, or 7th phase. This is it. So once you guys know this, you've got the roadmap to trade in. Accumulation, markup, reaccumulation, distribution, markdown, redistribution. All right, so let's go through it. All right. So here is support and resistance. We looked at support and resistance. Here is support and resistance right here. That's called the accumulation phase. So what's happening with price is this. The accumulation phase, guys, phase 1 will always come at the bottom of your screen. So if you're looking at a price chart, it's going to always come at the bottom. Bottom left, bottom, middle, or the bottom right. Okay, and what we want is for that price, as an example, to be $100 and come all the way down, let's say to $50 at a support. So we do want a low price, Mary. All right, we do want a low price. We want that price to come down. Okay, we'll know that it's come down, right? Because we'll be at the accumulation phase at the bottom of your chart, bottom of your screen. Here is resistance, here is support. We're gonna wait until the price breaks what? Resistance right here, right? This is our resistance line. Understand that the accumulation phase, so let's understand what's happening here. At the accumulation phase, guys, the reason why it's called the accumulation phase, this is where big hedge funds, big institutions are buying. All right. So when the price falls, the accumulation phase is where they are accumulating shares, blocks of shares. All right. So they're buying blocks of shares and they're buying them in blocks so that the price doesn't move higher. Okay. So they're accumulating shares slowly before they move the price higher. If they move the price higher before they accumulate, guess what? The price will move higher and they do not get a low price, a cheaper price. So this is why this is called the accumulation phase. This is where they're building positions. Now, we don't buy, we don't accumulate with them. We just wait. We just wait, because what they could do is move the price even lower to get a cheaper price. Okay, so we don't buy in the accumulation phase. We wait until they're ready, right, to move the price higher. We'll know when they're ready to move the price higher when the price breaks resistance right here. All right, once the price breaks resistance, that's called the markup phase. So now we are in the trend. All right, understand that price. And I know as new traders, we think it's going to go up forever, right? But it doesn't. That stock will never go up forever. All right, but it will rest. Okay, so it will rest and create new support and resistance line. If the price breaks the new resistance line, that's called the reaccumulation phase. Kind of like here, right? And with the reaccumulation phase, we've got all those traders, right, that missed the first buy on the break of the resistance here. These are new traders now entering the position, entering the trade on a break of resistance. So every time we see a break of resistance, guys, that's buying coming in, buying coming in, buying coming in, and then we want to buy. So if we wanted to, we could have taken a first position here on this first break of resistance. We could have taken a second position. All right, this is a horrible tool. A second position here. And we could keep doing that all the way up on break as the price breaks resistance. New buyers are coming in, new buyers are coming in. We can add and keep trading. And that's called the markup phase. Okay, so remember, reaccumulation, accumulation here, reaccumulation, new buyers coming in, new opportunities. If let's say we bought here, new buyers coming in here. Now, what they're doing is they're pushing our price higher. They're pushing our stock higher, and we want that. All right. At some point, right, price isn't going to go up forever. That stock can't go up forever. All right. At some point, we'll make a high, right? We'll make a high, right? The price isn't breaking resistance anymore. All right. So we have new consolidation, new support. When the price breaks support, which it will at some point, that's called the distribution phase. And then this is where we exit, Michael. We exit when the price breaks support. Let me clean
Yes,
this
sir.
up. All right, so here was our first trade right here, break of resistance. It didn't break support here, didn't break support here. It wasn't until here that the price broke support. Remember, resistance, support, resistance, support, resistance, support. So it wasn't until here that the price broke support. Why did the price break support here?
Sellers took control.
What's that?
The sellers took control.
The sellers are now in control. And when the sellers get in control, what do we have to do?
Exit.
Exit, sell.
Get out.
All right.
Question, sir.
Mm-hmm.
So in the accumulation phase, when price broke resistance and then it pulled back, did that now turn into a level of support?
Yes, very good, right? Very good. Yes, so when it right here, when it pulled back, right? We need it twice, right? So we did it twice, this becomes support.
Well, I mean your first R down below.
Here?
Yes, sir. That line, is that now support? Does that R now
Yes.
turn into a S?
Yes, very good. Okay, so very good. So previous resistance, and that's a bit more advanced, but previous resistance becomes support. Okay, so on the way down, resistance becomes support. And on the way up, right? On the way up, support becomes resistance. Okay,
Makes
so
sense.
just make a mental note of that.
Yes, sir.
Okay. All right. So guess what? Here was our buy signal. Let's clean it up. Here was our buy signal here, right? We started here in the accumulation phase. We waited. All right. Buyers are now in control. So we bought here on a break of resistance. That's called the markup phase. All right. Guess what? We had new buyers come in here on a break of this resistance. We could have just held our first position or we could have added here. That's the reaccumulation phase. All right. Price made a high, never really broke, right? New resistance. So we have pretty strong resistance here. Price then broke support right here. That's our cue to exit. So we would have bought here, sold here. So we bought when the buyers were buying. We know that on the break of resistance, and then we would have sold here on the break of support. And then here is our trade right here. Sellers are now continuing to push the price lower. That's called the markdown phase. So the price is going down, markdown phase. Just think red, right? Red sellers, green buyers. The price doesn't go down forever, so it's going to accumulate, consolidate. All right. When it breaks, even when it breaks new support levels, that's called distribution or redistribution phase. New sellers are coming in to push the price even lower, just like the opposite here with reaccumulation. New buyers are coming in to push the price even higher. This should give you guys a lot of aha, right? This is a clear, go ahead, Mary, you have a question?
Yeah, a very basic question.
Okay.
Where does this information come from? Who keeps it? Who determines the various resistance and support lines? Who keeps track of this?
Okay. When you say who keeps track of it, do you mean on when as a trader?
Yes, my
As a
basic
trader.
question is where is all this information coming from?
Okay. So we know, good question. Okay. So we know that it's made by traders, right? Support and resistance is made by individual traders that are watching these levels here, okay? And they're trading. So it's not just, we're not the only ones watching support and resistance, right? Most traders that know what they're doing, right? They follow the price action and they follow support and resistance. Okay. So it's made by traders remembering these levels. That's how it's made. Now, as a trader, we have to draw in our support and resistance lines. All right. We take it a step further with our process and our systems, because it's so important. We have systems that will do it automatically. Okay, but keep that thought, Mary. You're on the right track. Keep that thought. Okay. I want to show you guys two more charts here. All right. Okay, so you guys should see the next chart here. And what I want to show you guys is this. So here's the 4 market phases again. All right. So phase 1, accumulation. Phase 2, the markup phase. Reaccumulation within the markup phase. Distribution. Phase 3, phase 4, the markdown phase. And guess what? We start all over again with the accumulation phase. So that's it. There's only 4 phases that you guys have to know. Okay. So we have the accumulation phase here. Price broke resistance. Okay. What phase is this now? Anyone?
Reaccumulation.
No. Nope.
Excuse me, markup phase.
Markup phase. So let's say we've got right here, new support and resistance. The price breaks resistance right here. What phase is that?
And that's reaccumulation.
Oh, what? Reaccumulation. Very good. All right. At some point, price doesn't go any higher, right? Break support. What's that?
Distribution.
Distribution or markdown phase. Yeah, very good. You guys got it already. So if we were going to enter a trade, I want you guys to think about this. Where would you enter? If you're going to enter a trade, right? We talked about this, right? Entry and exit, right? If you're going to buy now, where would you buy?
The break of accumulation phase.
Perfect, right? Right in here, right? Not here, not here, not here. And that's where most traders buy, right? We just randomly get in, right? So could you imagine, think of this, guys. Think of this, right? This is why this is pretty cool, right? Could you imagine not knowing this? And you're buying right here. So right when the sellers are coming in, you enter in right here. Could you imagine that? I mean, think about that, right? We have no idea that this is happening, right? We have no idea that this is here. And we just look at a stock, and we do this all day long, right? And we just say, okay, right here, it's, as a matter of fact, right? Let's say it came from all the way down here, right? And it's at $30. Right? And we think we're getting a low price because it's cheap, right? Remember that, Mary? It's cheap, right? It's at $30, right? It was at $100 up here, and it's at $30, and we're buying it here. And we're buying it, guess what? In that markdown phase. And guess what? It keeps going lower and lower and lower. So we didn't buy it here. We got in here on this side in the markdown phase. And we're wondering why, right? It keeps going lower and lower and lower. That's why this is important, right? That's why this is important. All right. All right. I got another chart here. And I will let you guys go in a minute here. All right, but stay with me. You guys are doing good. Stay with me. All right. All right, take a picture of this also. Take a picture of this screenshot. Trend following the meat of the trade. I call this the meat of the trade. Take a picture of it. When you guys get a chance, print it. Print it out. Laminate it. So trend following the meat of the trade. All right. So we're going to take everything we just went through, right? And now we're gonna use, this is the meat of the trade, the meat of the trade. You're gonna be forced to try to get the whole trade, all of the trade, right? That's trying to get the very bottom of the trade. And I'm gonna say this, right? With our traders, we kind of teach them not to do that. As new traders, you're going to want to do that. You're going to want to get the bottom price. And we talked about that, right? So understand when the price comes down like this, right? At the bottom here, let's say it's $50, right? $50 here. Everything is going to tell you to buy, to buy. Two things that we do as traders: we buy at the high and we buy at the low. And a lot of times we buy at the high, we sell at the low. All right. So forget trying to get the bottom here. Just forget that. All right. We'll never get the very bottom, because the sellers, that's sellers territory. We need to wait for the price to break resistance here. So that's where we're going to enter. We're going to enter right here when the price breaks resistance. We'll never get the very top. Why can't we get the very top? Anyone?
Because we can't predict the future.
We can't predict the future, but what else? Think just like keep it simple. Keep it simple. Keep it simple. Right? Trading is very, very simple. Why can't we exit here or here or here? Yes, we can predict the future. What else?
Is it because we are following someone else? We are following what other people are doing, so there's a lag.
Okay. Well, let's keep it simple. Why can't we get out? Look at the line here. Look at this line here. That's the markup phase. Why can't we get out here, get out here, get out here? Even why can't we exit here? Or why shouldn't we?
True.
Why can't we? 1 second here. Because it hasn't, who said that? Because it hasn't broken support. All right, hold on. One second, guys. Hold on. I lost the chart here. Okay. Okay. Understand that here, if we try to enter here at $50, guess what? Still seller's territory. Price could go lower. We need to wait to enter here. Same thing here. We can't exit here. We can't exit here because guess what? We're still in the what? The markup phase, right? The markup phase. We're still in the markup phase. We're still buying, right? We're still buying. Buyers are still in control. All right. This right here is going to mess you up. So let's say the price reaches $100 here. We can't sell here. We have to wait, right? Till the price breaks what? Support. And why do we have to wait till the price breaks support? Same thing here, right?
It's going to confirm the sellers are in control.
Very good, Michael. Very good. Because now we know the sellers are now in control. Now, if we randomly, can we randomly exit anywhere here? Yes. But guess what? We're not trading the proper way because guess what? The price could keep going up. Sellers could decide to get in here. So we wait until sellers come in, break support, and then that's our exit here. Or guess what? It's our exit here. Whenever the price breaks support is where we exit. So that's why we always buy on a break of resistance, sell on a break of support. All right. Now you're going to see your P&L. It's going to read a decent profit, right? But guess what? We only exit when the price pulls back, breaks support, and we exit the trade. All right. Makes sense?
Yes.
One more chart and we're done. And I'm going to show you guys a live chart. We're going to look at a live chart. So we're going to take all of this information and we're going to go live in the markets. All right. Live in the markets. We're going to take all of that information and we're going to, since Mary mentioned stocks, we're going to look at a stock. All right, we're going to look at some stocks and we're going to take all of that information and now we're going to trade. All right. So let's go through a few examples here and then we'll be done. You guys are doing well. Okay, what phase is this?
That is going to be the redistribution phase.
Redistribution, yes, redistribution.
Or markdown, excuse me.
Very good. So markdown, this is the markdown phase. So red candles, price is moving lower, the markdown phase. Redistribution, these are our support and resistance lines. All right, so we drew in our support and resistance lines automatically. As traders, remember this, as traders, you're going to have to draw your lines in manually. Unless you have a process like we have here that does it automatically for you. You're going to have to draw in your support and resistance lines. You're going to have to identify, right, where support and resistance is, and you're going to have to draw in those lines. You can't get away from it. All right. So we have it here. Every time the price broke support, that's redistribution. That's the markdown phase. We would not be buying. All right. All of this is the markdown phase. Okay. What phase is this here? What phase is this here? At the bottom here. What phase is this right here?
Accumulation.
Accumulation. Very good. Very good, Mike. Very good. Accumulation phase. All right. So here is support. Here is resistance. we have to wait for what? To buy. We have to wait for the buyers, right? For the price to break resistance. All right. So just think red candles, sellers, green candles, buyers. Here is where the price broke resistance right here. We got a buy signal. Our systems give a buy signal right here, this blue arrow right here. And guess what? The buyers are now in control. So we would have bought here, green candles. What phase is this now? What phase is this?
Markup.
The markup phase. Very good. The markup phase. So we didn't buy here. We waited, we waited, we waited. Here's the accumulation. We didn't buy at the bottom here. Because guess what? We could have bought at the bottom here. Price still kept going lower. We could have bought at the bottom here. Guess what? Guess what? We waited until the buyers came in, and we know the buyers came in when the price broke resistance right here. So we bought here. Now we're in the markup phase. All right. What's this phase right here? When the price breaks resistance in the markup phase. What's that?
Reaccumulation.
Very good, Mary. Reaccumulation, right? So we got new buyers entering here. Right here is resistance also. What phase is this when new buyers come in and break resistance? Right here. What phase is this?
Still reaccumulation.
Same reaccumulation. Very good, right? And then same thing here, reaccumulation. So guess what, guys? We didn't buy when the sellers were selling. We were out. We waited, we waited, we waited. Right? We needed confirmation that it's time to buy. We got confirmation when, guess what? The buyers finally came in, broke resistance. All right. So let's say we bought here. Guess what? New buyers come in to push our price higher. New buyers came in here to push our price even higher. New buyers came in here to push our price even higher. Pretty cool, huh?
Yes.
Now, when would we sell? When would we exit?
When price breaks that previous support, or when price breaks that support level at that top, that last X.
So do we have support yet?
Nah.
Do we have support?
No, we don't.
No.
We don't, right? We do not have support. All right. So what do?
Wait.
We wait. Good job, guys. We wait. We wait. We wait. And this is how we trade, right? This is how we trade. One more example. I promise. One more example. And I promise I'll let you guys go. One more example. What is the price doing here? Look over here. What is the price doing here on this side here? What phase are we in over here?
That looks like accumulation.
Accumulation and what? What comes after accumulation?
Markup.
Markup. Yeah, we've got markup because guess what? It broke resistance. Guess what? Price is moving higher, okay? I just want you guys to kind of go through this. What phase are we in here? Look right here. What phase are we in?
Accumulation.
Accumulation. Very good. All right. What phase are we in? What phase are we in? Quick. What phase are we in here?
Markup.
Markup. Very good. What phase are we in here? This
Mark
is a
down.
tricky, this is a tricky one.
Mark down.
Not quite marked down.
Distribution.
Distribution, very good. If it breaks resistance, right? That's reaccumulation. If it breaks support, that's marked down. Very good. Distribution, indecision right here. All right, markup, 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 markup. What phase is this?
Accumulation.
Accumulation, but look closer.
Ooh.
Look closer. We do have a buy signal here. We have a green candle. Price is breaking resistance. This is an early break. Markup. So look, very good. Markup. Okay, so look here, guys. Look here. Look here. This is why we do this. All right. This is why we do this. This is why we do this. Someone bought this stock here at $10 up here. And look at that markdown phase. And now it's at $1, $1.03. Where would you rather buy it? Up here or down here?
Down at $1.03.
What's that?
At the bottom.
Here? At the bottom, right? So,
Yeah.
So we do want a cheap price, but just because it's cheap, we don't want to buy it. Look here, we want to make sure that what? The buyers are buying, right? We don't want to buy it down here because it could keep going lower. It could go to 50 cents. It could go to 25 cents. It could go to 0, right? So we're going to buy it here. So let's say for instance, let's say for instance, we got in here. Here is resistance. I'm gonna make this. Let's see, and you guys have done really well this evening. I love it. All right, so let's say you guys, let's say here is resistance. Here is our buy signal here to get in. Here is support. Here is support right here. So let's say, for instance, we got a buy signal here. It's at $1.03, right? We bought here, right? When would we get out? When would we get out?
If it broke, I guess, what was previous resistance.
Okay. So good. So we could have, let's say the price goes up, right? Let's say it goes up, right? This is resistance. Previous resistance becomes support. All right. So let's say it fails. We could get out here. Where else could we get out? Get a sell signal to get out.
Down at support.
Down at further support right here, right? And would we have taken a loss either here or here?
Yes.
Is that good? Is that good or bad?
It's bad.
Why is it bad?
Why is it bad that we took a loss?
Yeah.
We lost money.
We lost money. All right. So let's talk about this, okay? Let's talk about this. Is it better to have because we had a loss up here. Look here. Here is where we had a buy signal here, right? We had a buy signal here on a break of this resistance right here. And then this white arrow here is our sell signal to get out. So yes, we bought here, right? So we bought at, let's say, $2.50, got it at $2. Is this good or bad?
It's bad.
It's bad. And this would have been bad too, right? Which is worse, taking this loss here or even this loss here, or taking this loss here to this loss here?
The one up at 450 and selling at $1.03. That's way worse. That's the worst. That's the worst case scenario.
So is this a good loss?
That's a better loss. Yes.
Is this a good loss?
Yes.
It is. Minimize your losses.
Yes. Yes. So we're going to have losses when we trade.
Yeah.
Okay. What we want to do is we want to cut our losses quickly. So when we're wrong, just like here, we want to get out quickly, right? Rather than staying in for a larger loss. All right. So if we took this trade here and it comes back down and it breaks support, we're going to get out. So we're going to take a small loss. And what we want in trading is we want to take small losses, big wins. But how do we manage our losses and our wins? We manage our losses, okay, because we want to exit when the sellers come in. We want to get out on a break of support, okay, just like here. So we go in full circle, guys, full circle. So this is why we want to exit on a break of support, because the sellers are coming in and we don't know how far they will take the price down. Okay, so yes, we bought here. All right, we don't know whether or not the price will move higher. All we can do is control when the sellers come in. And we know when the sellers come in, we'll know that when the price breaks support. And what we have to do is then close the trade. All right. Same here. If we didn't get out here on when the price broke support, guess what? This is what happens. So we want small losses, manage our losses, big wins. Okay. All right. Good job, guys. Good job. Good job. You guys are getting this. Keep coming. Keep coming. All right. Keep coming. Any questions on this before we leave this evening? Any questions on this? Make sense?
Yes.
All right, good. Keep, we do these classes every Tuesdays, and then we have the other classes. Keep coming, right? This is how we're gonna learn this information, all right, and get this information, all right? All right, guys, good job. Good job. I hope you guys took screenshots, pictures of support and resistance, the 4 market phases, trend following, all right? And I'll see you guys next time. We're having the class tomorrow. I believe tomorrow is, we have trend following, trading in the zone mindset, and trading systems tomorrow. Okay, take care. Thanks for coming. I'll see you guys tomorrow. Take care, guys. Bye-bye.
Thanks.
Thank you.
Bye.